Want to move on to Bryce Gilliland. So Bryce is one of the. Bryce, are you the top hedge fund manager in the crypto space? I don't know, but maybe you can introduce yourself, and then I'm going to stop this poll and share the polling information with you. So get going.
All right, thanks, Marty, and thanks for having us. For anyone who is experienced in crypto, you had another wild ride on Monday. We've seen this before. We've seen this many times. For anyone who wasn't experienced in crypto, welcome to a wild ride in crypto. We saw about a 30%, maybe 25 to 30% drawdown on Monday, and it definitely shakes out some of the investors. But just a little fact, during the 2017 bull run, we saw 9 such events happen before getting to the top. So it's something that we're very used to. And part of my whole message for today is to say volatility is what is expected in digital currencies. And also volatility is what is the opportunity in the digital currencies for us. Just looking at a little bit of these poll results. So how do you hedge Bitcoin investment? What do you think are Bitcoin's biggest challenges in 2021? What do you think were the most important factors? Okay, so
if you like, I have my own philosophical perspective on this MicroStrategy investment and what it means. But I really want you to talk about your fund, how you got into what you're doing. How can you possibly outperform Bitcoin if you're investing in Bitcoin? So again, please, you have a presentation. Feel free to go forward.
So I have a presentation I'll jump into. Want to make sure this is interactive, so please interrupt me a little bit if that's happening. And can you guys see this right now?
Looks good.
Okay, great. Just a little disclaimer. Again, just ask me questions as we're going through this. Happy to answer anything. A little bit about Quincent Capital. So we've been trading since 2014 personally. We started managing accounts in 2016, and then we're an emerging hedge fund. We've been in operations for almost a year now. We manage about 200 million in capital. And last year we had a phenomenal year. We had 812% net returns. So you are able to outperform Bitcoin, and we do understand that that number seems pretty unreasonable. We do try to target a 40 to 60% annual return given the sector. We are swing traders. We use derivatives, options, but we focus on capital preservation and risk management. We've never had a down year. Each of our years has been greater than 60% net. So we feel very proud of that. And that's how we protect capital so that we can maximize it in the future. And then crypto is a growth-oriented sector. For many that don't know, it's less than $1 trillion market cap. It's actually kind of toying with that number at this moment in time, and it's uncorrelated. So we think it's a very high opportunity sector, especially if you know how to use options and derivatives, which we do, as well as play in the spot market. The biggest issue that I wanted to jump into was continued market volatility. So part of what our strategy takes advantage of is the market volatility. Whatever your reason for the market volatility, we like to think we're narrative agnostic, but narrative aware. So is it fixed supply, inflationary hedge, method for uber wealthy to transfer wealth across jurisdictions, or a variety of other reasons? It doesn't matter so much to us. What matters is that those narratives exist, and those narratives are going to impact the market. So we think digital currencies and Bitcoin will continue to see this outsized volatility. And then this chart just shows you the volatility from about 2014 through 2021. So you can see it's averaging annualized at 100%, which is extremely high. I want to see that I'm answering any questions that are coming up, but a little bit about our trading philosophy is we generate high risk-adjusted returns. That's really our focus, is risk-adjusted returns, by executing short to intermediate term trades. These trades last several days to several weeks, occasionally several months, and then very occasionally intraday trades. So I can go over an example in a little. And then we focus on this in 3 areas. One is qualitative analysis, assessing market movements. So a lot of technical analysis is used in this, a lot of price action, support resistance, market sentiment review. This is both quantitative and qualitative. So what we're seeing is what's the open interest, what's the volume, how's that participating? I think derivatives market is about 20 billion right now. So we're seeing that rapidly expand. We're seeing a huge influx of what we're calling smart money into the space. We think this has been largely retail driven for years, but recently you've seen pretty much every major financial firm come into the space and have offerings for their customers. Even JP Morgan and Goldman Sachs have now rotated into supporting this, as opposed to saying, it's a fraud or it's just hype. So these big regulatory and policy announcements can also have an impact on price action. And then lastly is what we call cryptocurrency fundamental analysis. There's not many business models right now, so it's not a true fundamental analysis, but it's where is the technology moving? How is it moving forward? What's coming in behind it? And then what's the impact on the price action going to be? And so by taking these three areas, this kind of qualitative look at it, this market sentiment review, and this cryptocurrency fundamental analysis, we can make our trades and play in the options market. And we found that we have about a 2/3 win rate. While we're very proud of our win rate, what's more important is that you're letting your winners run and finding those asymmetrical returns, which we feel we've also been able to do pretty well in the space. Oh, there's a lot of questions. Are the hands raised? Sorry, I'll stop sharing for a second. Hey, Marty, it looks like your hand's raised. Are you trying to ask a question?
I was responding to somebody else's hand. My apologies.
Okay. Rebecca?
We have a Q&A for Bryce. It's from the well-known Gudrun Zeller, who has been in crypto probably as long as anybody else. So it says, when central banks issue their own crypto, what impact do you see that having on Bitcoin? Most argue it will increase the price of Bitcoin. Question is, do you agree, and how much of an impact?
We generally agree with that statement. Just supply demand, you're having one good that has significantly more supply than the other. And the narrative behind fixed supply, mathematic supply of Bitcoin versus governments having flexibility and human decision in the loop have made it so that narrative is playing out pretty strongly. There's another forecast. It's called the Plan B forecast. If you look at it on Twitter, these guys ran a forecast that looks at supply demand, models it off silver and gold models, and shows that kind of the next tier of Bitcoin run up should be about 100K. And we should be reaching that by the end of the year. While we're always uncertain with forecasting models, they're forecasting models, that their guess is at best. We do think that's a very educated look at it, and something that a lot more firms are coming to support some kind of narrative around that. What does support that as well as this money printing, but we don't think money printing's the large underlying factor. We do think it will support the Bitcoin narrative. Let me know if that doesn't answer your question. And then I want to move back and show you guys just an example of some trades that we've gone through, specifically what happened in March. So this is our look at March 2020 trading. And if you're looking at March, you have to take yourself back to what was happening at the time. And so in March of this year, what's happening is COVID has just come to the US and cases are starting to spike. We're seeing a very rapid descent in the equities market. And the Bitcoin narrative behind any kind of supply shock is usually Bitcoin should spike. So if you think about the genesis, Bitcoin was founded in about 06-08 timeframe based on money printing back in the day. And so Bitcoin took off there. So our last historical event, crypto's not that old, but the last historical event with that was a major upswing. The next one was the Greek financial crisis. When that occurred, Bitcoin also shot up. So you have a couple very prominent events that have, economic uncertainty and then Bitcoin shooting up. So the news around Bitcoin was this might be the last time it's sub 10K. It was bouncing off the support line. So it's looking very strong and bullish. So our first trade of that month was a long at 8,800. And we're looking at that narrative. It moves up into the 9,000s. We had a small amount of leverage. And then a few days later, it starts rapidly descending as well. So what was happening was that correlation between Bitcoin and equities was increasing. And this made us think there's going to be a major risk off event or a continued risk off event. And in which case all assets correlate to one. So we flipped our position into a short at that point in time because it broke through the resistance or the support. And then we held that position for about another week. We had an incredible black swan event where it dropped, I want to say about 50% in a day. We closed our short halfway through that event at about 26% down, because anything beyond that is really a fat tail event, something that we didn't expect. We did watch the markets though. I remember we were up at about 4 a.m., one of the pleasures of cryptocurrency. And we entered back into a long in the market around 4,000. And we saw a really interesting price dynamic occurring at that point in time, where derivatives were trading much lower than spot. It was about 4,500 to 4,000 was the price differential. And so we thought that was just a short-term fear in the market and something we could take advantage of. So we entered a position there, a smaller position, about 25% of our portfolio. And then we were able to take that long position up to about 6,000, a little bit 10 days later or so. And so this was an extreme event. Obviously, March was the Black Swan event, and this was the Black Swan event of crypto. We hadn't seen one like this for 5 years, but it's something that we were able to take advantage of. And looking at the outsized volatility in crypto, these swings aren't too irregular, as we could even see from Monday. So appropriate hedging of these strategies and in this sector is really something that can create a lot of outsized gains for people who are speculating. And what we're thinking about in the space to change it a little bit is people are looking to allocate to the space. And what are they trying to allocate to is the question. Is it a long strategy? Is it just buying the underlying asset? Is it the new DeFi that's coming out and VCs? Or do they want to play in the vol strategies? And with crypto still being 5 to 10x vol, that's where we are putting our money at. Just want to share that. So there's a couple of questions. What do you see the roles of digital currencies, BTC, blockchain, ETH play into the recapitalization post-COVID pandemic, given the run-up in price actions and the comparison of BTC as another financial alternative hub? It's a good question. So we think some of the digital currencies that are under development right now, specifically decentralized finance, DeFi, which plays on ETH, it's built on the ETH network. We think those are going to dramatically change finance moving forward. They will lower the costs of access to loans. They will lower the cost of money transfer. They will enable greater money transfer globally. That seems really interesting. BTC looks like it's going to be more of a peg, or like literally the digital gold. It has by far the strongest network, which means the least able to be hacked. And for that reason, we're seeing a lot more interest from Wall Street and larger capital firms in the space towards that. So yeah, and we think it still actually has a lot of legs to run this year. So we're very bullish on that. Arguably, BTC isn't even a true currency, but at most a store of value. So I wonder how that analysis would take shape. Again, this goes to kind of being narrative agnostic. We're not saying that BTC is going to fit into any of those narratives. We think some of them are stickier than others, but we think all of those will play into the volatility. And if you're able to capture the volatility, you can consistently create outsized gains for you, at least on an annual or multi-year basis.
Hey, Bryce, I just want to jump in here because this is a question that's been asked many times. Mm-hmm. And I think Dan Moore had given an answer. It was probably 5 years ago when he said it's an asset that's highly volatile, that's tradable. And there's an opportunity, and he's a trader, right? And obviously he's had great fortune with it. But I think if you're a trader, you're going with a different sensibility than, let's say, religion, right? Mm-hmm.
Yeah.
I mean, I have no passion for Bitcoin myself, but I see that there's a lot of things that can make it take several legs up. So.
Yeah, I mean, I think that's the interesting part of being a hedge fund is you're not trying to wedge yourself to a societal outcome. You're trying to wedge yourself to financial gain. In most cases, hopefully you can be benefiting society or donating back in other ways. But our goal as, a trend following mean reversion digital currency hedge fund is to try to outperform those assets. And so if you have a volatile asset and you have a volatility based strategy and it's outsized volatility, well, then we present an opportunity to outperform most assets, if not all assets in various classes. And so that's what we're looking to do and be a part of people's portfolio doing that. But, we're not going to go trumpet, Bitcoin's going to save the planet out there like some people think it might.
Right, and I feel the same way about DeFi and most blockchain. But I guess my question is, what are the special situations that you see that could mean a leg up for Bitcoin in the near future? So, and by the way, we've been getting questions from our audience who bought like Ether and other cryptos, and they're saying, should I sell all that and get into Bitcoin? So,
yeah. Okay, so I want to get to a couple things. So, yeah, this guy read that 5% of registered addresses own 90 to 95% of Bitcoin. There is some truth to that. I don't answer that technical of a question without looking at the data. Some of the truth to that, though, is that those addresses are like Grayscale, which has a myriad of people owning it, or exchanges, which have a large volume of crypto themselves. And so while one address owns that, the exchange address, what's happening, what we call off-chain, is the exchange has all of its trading operations. And so the exchange has an address that owns the Bitcoin, but the rest of the Bitcoin is being traded on the exchange by thousands or millions of users. We are seeing an increase in the amount of addresses out there and the amount of participation. There is some, kind of whale issues that people are talking about. I did want to get to a couple more slides before I stop, and I don't know exactly the time on this since it got moved a little. So this is our historical trading performance. We're very proud of it. Also, it creates a little bit of an awkward chart. Bitcoin's appreciated substantially. We've been able to outperform that. And then for people who know what BitMEX is, BitMEX was one of the leading derivative exchanges globally. It ran into some issues with the SEC, CFTC earlier this year. We have since removed our accounts from there. We don't want to be involved in that. But we were able to achieve leaderboard rankings on that. So being a top 10 notional trader over several years. So we're very proud of that. And then these are our performance metrics over the last 7 years, all verifiable trade data behind it. Again, we really like our risk reward return ratios. And then as you can see, our fund, I'd say kind of our most proud moments is 2014 and 2018. Bitcoin saw significant declines, and we were able to still make money during those years. And protecting your capital during down markets is one of the best things you can do for long-term capital preservation and gain. So just want to point that slide out.
Bryce, I just say this is really extraordinary results, and it's hard to believe that it can continue, or that there'll be other years where there'll be leg ups like this. Mm-hmm. I'm just saying from a pinching myself point of view versus I'm not doubting you. I mean, as I said, I can already envision 3 or 4 scenarios where Bitcoin's going to double just because of Fed policy.
Mm-hmm. Yeah. So, we like to say we target 40 to 60% a year. We think the volatility in the space will continue at a rate that is a reasonable target for this, even though those numbers themselves seem relatively high. But we do think that's something that's consistent. We think the expansion that's happening over the next year, like MicroStrategy getting in and throwing, what have they thrown, nearly $1 billion now, that might become a semi-regular thing. Family offices are rushing in, large institutions are rushing in, more hedge funds are rushing in. So the capital inflow continues to accelerate into this space. And since it's a sub $1 trillion asset, we're still seeing lots of room to grow. It has to double just to get to silver. It has to, like 15x to get to gold, something like that. So really, we think there's a lot of upside in the market still. 2017, is that going to happen again? Probably not. Is it going to do 300% this year like it did last year? Probably not. But will it have outsized volatility that you can take advantage of? I definitely think so.
So my question, Bryce, is there a fiduciary duty for cash managers at every company that's cash heavy to look at Bitcoin?
Yeah, so I think
knowing the political agenda of the Fed.
Yeah, I mean, I think we are very bullish. We've been in the space for a long time. We think it's nearly irresponsible to not allocate a portion to it. The risk return for just holding Bitcoin, even as volatile as it is, has outstripped almost every other asset class over the last 7 years. And you're seeing more concrete institutional level support for this. So to continue to say, it's a hoax or it's not going to happen is probably going to leave you flat-footed a year from now. And so we think it's something that everyone should allocate some portion to. Now, how you allocate the portion, What portion that is and how you allocate the portion is a totally different set of questions.
You got a couple more minutes, maybe 1 or 2 more minutes. So do you want to just like talk more about, your direction for this year and any special situations that you're looking at, or are you just going to run the model?
So we're discretionary, though we do have an algo. Thanks for the questions. We're discretionary, but we have an algo. This year is going to be a very interesting year because we're in a price discovery mode. So determining when the pullbacks are, hedging around those or being able to short those is really what's going to create the outsized gains. But being able to hold on, maybe use some call options or a small amount of leverage to increase your returns while it is moving up, to either offset fees or to try to capitalize more, are what we are looking at. And then we do like to look at when the algo trips out of a position, but we may be holding a position. We find that very interesting. It's a good intellectual conversation internally to say, what kind of macro effects are we playing in to our decision making for trading versus what the algo is playing in to its decision making. If you look at some of these other forecasts, it looks like this run up happens in a way that's somewhat timed with the halving events. And for anyone who doesn't know, the halving event is when the amount of Bitcoin being delivered out to miners who help maintain the system reduces by 50%. So it's called the halving. And that happens every few years in Bitcoin. And then when that happens, you'll see a run up in price subsequently following it. And this is what these models are based off of.
We have time for one last question, if it can be a short answer, which is Goodwin's question about what percent of portfolio dollars do you tend to short, and how do you protect against black swan events while you're sleeping?
Yeah, so we will short usually up to 75 or 100% if we're extremely confident. Usually that's after the move has been made. As we've gotten larger, that percentage has decreased. We're probably more around 25 to 50%. We have alarms on our phones so that we can wake up if any kind of black swan event does occur, and we can immediately, get to the computer in probably 5 minutes or less, because you have to be prepared for these kind of markets. That said, I think a lot of these you can relatively see coming, and when the market's becoming more volatile or reaching a toppy point, you just reduce your position size significantly.
Fantastic. Well, listen, Bryce, great job. Thanks so much. Very informative. Please stay on and send people your contact information via the chat, etc. So I want